We're here to empower high-income earners to gain back control of your time through financial independence and stop trading your time for money and start letting your money work harder for you.
And hey, if you want to meet other high-income earners on their FIRE journey, join our High Income Earners FIRE Facebook group. Every month, we'll have guest speakers and we'll share about what our team is currently working on and allow you to share what you are working on with other high-income earners.
Hello, everyone. Welcome back to High Income Earner FIRE podcast. I'm your co-host, Cody Ye. And of course, our Aline Prack, our co-host, is again absent. I'm still hoping that she'll come back one day as a special guest, but she's still busy at work and kids and all that. But today we have a really interesting guest. I'm not going to mention his name yet, but he's interesting in so many ways because he's not even 30s yet, and he already sold his startup company at the age of 23, and now he owns more than $10 million in real estate. And he also quit his full-time corporate sales job for ADP, or AKA, in the SAP software business about a year ago. So he's a wealth of knowledge offline, online, and I just want to welcome you, Jack Daniel.
Hey, thanks for having me, Cody. Excited to be on the pod.
Yeah. So for people who doesn't know you, can you kind of give us a quick rundown of what happened after graduation? Let's put it that way. How do you get into corporate job? Was that your dream?
Yeah, I had a bit of an untraditional, let's call it, path, right? So when I was in high school and just after high school, I was a professional snowboarder and was kind of traveling the world and spending 8 or 9 months of the year, traveling around. And when I was actually in grade 11, I graduated a year early. So I moved out to Whistler full time. And when I was living in Whistler and kind of chasing the Olympic dream and everything, I ended up breaking my back actually, which was bad, but it wasn't as severe as it sounds. So, I had to come home. And when I came home and I was in the recovery phase and I had to take basically like 8 or 9 months off to recover, what it did was it started making me realize that, okay, like there's got to be more to life than just kind of this snowboarding dream. Like I got to start thinking about what's the plan B, because until then, being a young athlete, you kind of just, it's the only thing you think about. So, I had no plans necessarily at that point to go to post-secondary school after high school. It was kind of just chase a snowboarding dream, but I ended up falling into basically starting a startup, which we can get into a little bit later. And that took me down a path, transitioned me out of snowboarding for about 4 or 5 years until I had a successful exit from the company when I was about 22, 23. And I distinctively remember this moment, when everything was kind of finalized, and I kind of said to myself, like, okay, that chapter's closed off, but what now? And one of my mentors who was on the board of my company took me out for lunch just to kind of see how things were going. And I felt super lost at the time because I was 23, I had a bit of money, but I hadn't gone to post-secondary yet. And I didn't necessarily have like a defined corporate career path that I was going to go down.
Were you a millionaire at that point already when you sold your startup at 23? Is that in 7-figure or just like multiple 6-figure?
Yeah, like in the six-figure range. So at that point, I had 21 investors that came come on board in different pieces of equity, and I actually had a co-founder in it as well too. So I didn't, start off being the sole founder of it.
Got it.
But he asked me something really interesting, and I always remember it. He said, "What were the points of your business that you liked the most, and what did you hate?" Mm-hmm. And then I said, you know what? I love the interaction part. I love the sales part. And I love kind of being with clients and structuring deals. So he said, okay, why don't you come work for my startup downtown, which he had just raised $55 million for, and it had about 400 employees. So it was late stage startup. Mm-hmm. And he's like, come do software sales for me and see if you like it. Mm-hmm. So I ended up going, taking a couple months off traveling and then starting with him in the spring. And I ended up finding out that I absolutely love doing sales. The only thing I just didn't like about that company and that job was going downtown every day in the commute. So after, almost a year of basically commuting an hour and a half each way, from where I live to downtown Toronto, I kind of called it quits on it. And an opportunity opened up for me at a Fortune 500 company called ADP for a senior sales position. And I kind of jumped on that. And it was a good bridge because being an entrepreneur and making your own schedule and having your own time, and then going into a corporate environment is very different where you don't have ownership over your time. So all of a sudden I found myself in a place where I'm at ADP now, and I get this like huge, amazing hybrid environment where I only have to go to the office Monday mornings, and I kind of run my own book of business and I'm left alone. And, that was kind of the start of my like huge transition into my sales and corporate career that I, recently transitioned out of, but it was an exciting chapter for me.
Mm-hmm. And you said you were planning for a 5-year exit before you quit your ADP job, right? So how did you plan for that?
So the interesting thing about the ADP position that I got, I was super young. I think I was like 24, 25 at the time when I went into that position. And everybody else that was on my team at the time was kind of mid 30s to late 40s. Mm-hmm. So I had a lot of older influence in basically seeing what they were doing with their commissions and their money and things like that. And the common denominator between the most of them was it was going into real estate. So, I looked at basically the stresses that, financial obligations and things like that have. And then I looked at basically how they position their lives so that basically they had supplementary income on the back end, mm-hmm. and they had built up these great, wealth coffers while having a corporate job. And I basically started doing the exact same thing that they did with a 5-year plan in mind, that it was going to transition out of corporate, full-time back to being an entrepreneur and building a real estate business, which I was thankful to do about a year ago.
Mm-hmm, mm-hmm. Do you mind sharing how much were you guys making as a corporate sales? Just like open our eyes, broaden our horizon a little bit. And then you said you were saving 80% of the active income. So can you give us some context now that you're not working for that job anymore? Just a rough range.
Sure. I'm a big advocate of people going into software sales. It's one of the most lucrative, I would say, jobs out there, similar to investment banking and things like that, where you don't need the same education standards and work boundaries that you do in like different finance positions. So I think I started off when I was there around like 140 to 150,000 a year. And by the time I was in my last position, there and at the next company I was at, which was TELUS, I was making around $250,000.
Wow. That's just pure. There's probably some commission and base and commission, right? It's not like they're not going to pay you if you're not bringing us stuff, right?
So sales is the best when it's good, but it's the worst when it's going bad, right? So there's pros and cons to both. But it was about a 50-50 structure, which is pretty common. And then there was some stock components and some kind of other stuff as well.
Cool. Thanks for sharing that. So there you have it. If young people want to make good bucks, learn the number one skill you can have is sales skill, right? You're selling yourself every day, no matter what you're thinking. You're talking to people, you're selling. You're either being sold or you're selling, right? That's a word for it. So what happened after that? You planned for 5 years. How do you plan for that 5 years? So you were making great money between 140 to 250. You're saving 80% of it. What were you doing with those money? And how do you plan for it? What was your structure?
So the biggest thing was basically trying to figure out a way that I can grow a real estate portfolio and, get my foot in the door without impeding lifestyle, right? So, I had a bit of money put aside. I bought a first property in 2017 in Oakville and did a duplex conversion on it. So I was essentially house hacking. And for those who don't know, it's essentially when, you rent out a portion of your house and then live in another portion. It either subsets, a portion of the costs or covers it completely. Mm-hmm. So I did that. And what that did was it allowed me to kind of start building equity and get in the market, but also start learning the skill set to be able to build that kind of business without impeding my lifestyle in my 20s. So I was still able to kind of, throw my commission money and things like that into renovations and kind of getting that deal going forward. But then what it did was once I got the first deal done and I got my first rent payment, at that moment I knew I was addicted and that's where I was going to keep the growth continuing.
Mm-hmm. And then from there, did you just try to refinance some money and go on to the next one, and more money you make from work, just keep saving up for down payment, or how did it go from there until they give you the point where you feel like you're comfortable quitting, which was a year ago?
Yeah. So the biggest thing for me was the knowledge gap, right? So I got the first property underway. I T4 income, I was able to qualify for the mortgage, fine, no problem. I tried, I'd say about like 8 or 9 months after, to try to structure another deal and put it together. And I just didn't have the skill set to be able to understand, like, underwrite a deal properly and be able to get the financing and everything else in place. And it took me about another year after that till when I was able to basically pull off another deal. And then after that, I started investing in more education on the real estate side and mentorship and coaching and things like that. And instead of doing, one transaction every year or every other year, it was starting to do multiples every year, multiples every quarter. And it kind of snowballed from there.
Mm-hmm, mm-hmm. And then when you quit your corporate job, now you're on your own, what are your main source of income to support the lifestyle now?
So that's a great question. And, when I talk with my students basically about how they make that transition, there's kind of like a dark side that a lot of people don't talk about it.
You want to talk about it?
Yeah, sure. Absolutely. So I learned the hard way that basically, I like to look at it as like a zigzag approach. When you have a corporate job, what you're doing is you're trying to basically buy your time freedom. And then that's a second stage. So once you have enough supplementary income to basically leave that job, you go to stage 2. And then in stage 2, all of a sudden you go from being an active income stream to a more passive income stream, especially in real estate. And then you realize that you go from a AAA creditor with banks to basically no one wants to give you any money because the way your income's structured. So then what you have to do is you basically have to learn how to create other active income streams, which will then allow you to basically keep scaling and growing your portfolio. But I came to the point where I was in my corporate job and I was buying, tons of real estate and doing tons of deals and transactions and had all this money coming in and things were going super smooth. And then all of a sudden, boom, one day the growth just stopped when I'd left my corporate job. Mm. So then there was a bunch of other ways that basically I had to look to be able to deploy other income streams. And, there's basically 4 or 5 businesses that I have myself around now. The first is my real estate portfolio. So I have just over 10 million in assets that I manage for myself across Southern Ontario, all multifamily real estate properties. So, residential essentially.
Mm-hmm. Just like duplex, triplex, those, right? Small multifamily.
Exactly. Yeah. So a portfolio of a bunch of triplex, duplex, quadplex, things like that. Mm-hmm. So the second part that I found very lucrative, and I always understood, from my startup and raising money, was basically private lending. So I started a division of my company, Bernstein Capital, which does private lending. Mm-hmm. And I found that to be extremely lucrative for cash producing. And typically, when I am lending, I'm doing first position lending, and I'm doing it structured basically as 90-day bridge loans. Okay. And the reason why I find that so specifically lucrative is because you get the lender fee every 90 days, which is typically 2% of the gross lend. Mm-hmm. And then you compound it every 90 days plus your annual interest rate on top of that. Mm-hmm. Mm-hmm. So when I look at a blended annualized return on what I'm lending at, because I keep getting that quarterly compounding of the lending fee, it's almost a 21 to 22% annualized return.
Yeah. You're not the first person I heard about this. Like, people who don't get it means that, hey, Jack is not going out and say, we're going to gouge people. I say a bridge loan at 21% APR. No, he's basically having a lower rate, higher than A lender, B lender, because B loan is open loan. So it's a higher interest rate, maybe, 10, 12, 14, 15 sometimes. But because he's able to recycle the capital, rotate the capital a lot faster, and he charges 2% of that lender fee. So when it all compounded, all rolled it multiple times, it actually add up to 21 to 22%. Is that correct?
Exactly. So, sometimes like people break mortgages even sooner and you'll get the money back in like 6 weeks, 8 weeks, whatever. But the whole point is that lender fee of the 2% gross, when you blend that all together and then have an annualized rate of like usually around 8 to 10%, depending on the complexities of the deal and the risk, you end up seeing a great return, which is also secured against the asset. So it's a secured lend, not an unsecured lend, which, allows you to sleep at night essentially.
Yeah. So there's a different thing, since you mentioned about this, there's a different way of looking at diversifying, and it's something called capital stack, as in if you're lending out as a promissory notes, and if you're lending out as a first position, you put lien on a property. And if you're second position, if something goes wrong, the bank will get their money first. whoever is the first position get their money back, right? It's just for people who doesn't know. So first position, banks are not dumb. Banks are really smart, and they are usually on the first position. So that's very smart to do that.
Yeah, exactly. Like when I look at how a debt structure is going to be tranched out on a deal, like I don't want to be the subordinate debt. So typically I won't do second or third positions. I like to take the whole first position mortgage and just be the sole creditor on the property. Mm-hmm. And then, we look for assets and deals basically where the loan to value is kind of 70-30 or better than that, for exactly what just happened with the market flipping, right? To make sure the properties are still above water. If, you ever come in an unfortunate situation where there's some sort of liquidation of the asset.
Mm-hmm. Oh, that's very smart. So that's your second way. First way is, real estate portfolio. A lot of people say, Cody, you're going to get rich from real estate. I'm like, yeah, long term, right? You don't get rich from real estate from getting cash flows. More of the principal pay down, appreciation, and then last year around the Toronto, Ontario area, drop 15 to 30%, right? So that's a long-term game. And private lending is you see the immediate cash flow. And what are other ways? You say you have 5, right?
Yeah. So the third is my coaching and consulting business. So I partnered up with a larger coaching business for real estate coaching specifically. And between that, I've, blended 20 to 25 students that, basically I'm coaching and managing full time. So these are students that are typically at the 2 to 3 property range, and they want to be able to leave their corporate job and be able to have financial freedom through real estate. And we basically work back and coach them on a one-on-one basis to be able to kind of acquire more assets and restructure their life properly and get all their foundations set so that they can actually grow long-term wealth through real estate.
So what are the typical formula you give to these people? Let's say I own 3 property, Jack. That's about 3 million. I have a corporate job of pay me $100K. Like, what would you tell me to do?
So the first thing is it's about what goals are, right? Like, I have some students that come to me that say, hey, I want to build a nest egg for both of my kids. They're getting a little bit older and we want to be able to put something aside for them. There's other people that are super aggressive that are like, hey, I want to build a $50, $100 million portfolio. I'm going to dedicate the next 15 to 20 years to kind of doing that. Mm-hmm. And then you get other people that basically are just trying to kind of right themselves financially. So, they might have made some mistakes earlier on and they're a little bit later in life now, and they kind of see the power and they have seen the growth that people have had through real estate and investing. And they're basically trying to see compounded growth quickly to kind of catch up. But the big thing I always tell people with coaching is that what coaching and mentorship does is it doesn't teach you anything you'll not be able to learn yourself, but what it gives you is something called time compression. Mm-hmm. So what you might be able to go learn in 3, 4, 5 years yourself, I can probably get you up and running within 1 year. And then when you look at 4 or 5 years of that, you end up getting like 20 years or 25 years of growth in a 5-year period, where if you were to just do it by yourself and then slowly, part-time educate yourself and part-time get your foot in the door and not take action, you'll never see the compounded growth like that.
Yeah. I mean, coaching, we never have so much resource. Our parents' age, they don't have it. Now we have it, but now is information explosion. So it's actually harder to find what is a good coach and what is a bad coach. But at the end of the day, coaching just help you to get started, help you to stay focused. And there's really no one coaching. Even if you feel like the coach did not help you that much, they give you a leapfrog on it, right? Help you avoid a lot of mistakes. Not that you really need coaching, but 90% of people cannot figure it out in a short amount of time without making big mistakes, right? Even, I coach up a stock option, all that. One mistake they make could cost them more than whatever they pay me or whatever. So there's really that gap, right? How you do it. Can you do it on your own? Yeah, of course. I have like people reach out to me and say, Cody, I just watched your YouTube video and I make this amount of money. I'm like, good for you. Not everyone's that, but I'm really proud of you, right? So just throwing that in, you don't necessarily need coaching, but if time's more valuable for you, and a lot of your clients might be at the age where they can't spare more time, they need more hand holding, all that, that's where the coaching comes in.
Yeah, like the equivalation I always talk to people with it is imagine, when you look at a levered return, especially with real estate or, options trading or things like that, the concept is basically having a levered, position on time. You're basically just compressing the time and being able to maximize it and kind of 5x it essentially. But there's other intangible benefits like that and things too. But what coaching does is it helps people when they're in the right mindset and they're the right person, but it's not for everybody. If someone's not willing to take massive action and not willing to be coachable or really kind of put their heart into it, they're never going to see the results, that they're probably desiring to. Like, you still need to take action. You still need to grind. You still need to do hard work.
Mm-hmm. I agree. So we have your first three. What's your number 4 and 5?
Yeah. So the fourth is, I'm just finishing up my realtor's license right now. So I don't plan necessarily on being, kind of your normal agent or being an agent full time. But what I want to do is I want to be able to add value to students and to a lot of the people that I consult with and do investments with. Because I can understand how deals are structured, and I've done a lot myself. Every single real estate agent out there says that they focus on investments and this and that. But if you ask them what their portfolio is or what kind of investments they've done, maybe 5 to 10% of them actually have something tangible.
Mm-hmm. Yeah.
So what I want to do is I want to be able to create a power team for all the people that I work with. And I want to be one of those members of the power team and basically go and just deploy all those resources to everybody, and make sure that the power team is as efficient as possible.
Yeah, it's a one-stop shop, right? When the first agent I work with in Barrie, that's where my properties are when I first started, around the Barrie area, Simcoe area, right? Same thing. Young dude around my age has a whole power team figure out and helped me in my first legal duplex and all that. So I really appreciate that. And there's a difference between realtors and investor focused realtor. And the first question I ask them is really, okay, how many property have you done? Oh, okay, cool. Does that align with your goal? Yes. Okay. Because a lot of people say they're investor oriented, but if they don't own anything themselves, they don't have skin in the game. They don't really know. So that's a key question to ask. And, there's a saying, right? Show, not tell. Just show it to me, right? Don't just say good words, right? But that makes sense. So good job on that. I think you will do really well in that, especially with your underwriting experience and the coaching and all that. I think you will do pretty well. Is the fifth one kind of working halfway through as well? Like realtor license?
No, the fifth one. So the fifth one is some other investments that I've made that are basically throwing off free cash flow. So, there was a laundromat that I did a small investment in that, I make. It's not as profitable as people think, and it's actually not a great business model anymore.
Why do you think that is? Why is laundromat? That used to be really cool, eh? You go pull all the coins and be like, you declare your own tax. Not saying anyone should avoid tax, but you declare your own tax. Right.
Yeah. So the days of that kind of, I guess the typical term like washing money and all that kind of stuff, like almost everything's automated now. Mm-hmm. Almost everything's credit card.
Yeah, that's better.
Hydro efficient. Costs are much higher per the ratio that you can charge. So margins get squeezed on that. Mm-hmm. And then a lot of the time to, areas that you have to go to and things like that, it's very hard to expand a business like that or basically grow or open multiple locations because a lot of commercial landlords or commercial property owners don't want that kind of business there because there's environmental issues with it and it's much harder on insurance. Mm-hmm. So like a dead giveaway, when you see an asset sitting that used to be a laundromat, it's almost impossible to get it financed without going through a phase 1, phase 2. And a lot of times you need remediation, got to go to a phase 3. So when you look at, the business and things like that, the government's kind of smartened up and municipalities over time have smartened up and realized that, they do cause a fair bit of damage and seepage in the ground. It's like, an old gas station type thing. Yeah. But in the end, the numbers are what matters, right? Yeah. And the numbers and the margins on it basically are just squeezed to the point where, you can make a living off it, but it's not like this big lucrative business like people used to think it was back in the day.
Yeah, all the environmental thing, which is a good thing where keeping our planet safe and our living environment great. And just because the more regulation, less profit margin. It's a good thing. But if your grandfather in, or you already have a piece of property, so you don't have to pay for rent or pay less rent, or grandfather in rent, it might make sense. But if you, like Jack is saying, if you go out and try to say, I want to be a laundromat king, then yeah, good luck with that. Because, right?
Exactly. And the way I think about businesses, there's a couple other businesses which I've invested into, which we can talk about in a sec, but I love the McDonald's model. So anytime I buy a business that needs some sort of actual location, I want to own the actual real estate and have the business operating in my real estate. Yeah. But that business model, with the laundromats is very, very difficult to achieve both now, just because of all the regulatory issues and stigmas and things like that around it.
Yeah. That's very cool. Thanks for sharing all 5 sources of your income, right? Is there anything else you want to mention to us before going to our fire round?
You know what? I think the biggest thing right now, and the biggest takeaway that I'm kind of seeing with my group of friends and things like that is, the opportunities here. Everybody always talks about like, hey, when the next correction happens, when this happens, when that happens, like we're here and we're living in it. And it's just, how can you in 2023 seize the opportunity as much as you can and acquire as many assets as you can, so that when that recovery does happen, whether it's in 2, 3, 4, 5 years, that, you get that generational bump that people got in 2007, 2008, 2009. So, my advice to everybody is just take as much action as possible.
Yeah. And then I think I'll take a step back on that. I'm huge on taking action, but think about the risk you're getting in, because it makes sense to take action if the numbers work, even a bit slightly negative cash flow. When the interest rate eventually do come down in a year and 2, you can refinance, the property price will go up and all that. But you have to look at your entire whole portfolio. The people can take the most actions because they prepare for this. You're not already stuck in the market or over leveraged. If you're already over leveraged, you need to first figure out how do you weather the storm. So you might not be in a position to take massive action. But if you're someone, I have a student that comes in and is like, Cody, I sold my property right at January 2022, and I sold all my stock portfolio. I have $500,000. Teach me about stock option. I'm like, you know what? You're a lucky guy. Right? Then he's in position to do great things, whether it's a long-term, whether it's a cash flow strategy of a said and done. But you have to know where you are and don't overextend, and don't listen to just your neighbor or your friends are expanding, right? Look at where you are. Make sure you have the nest egg. Make sure you have everything covered and know what you're doing before you overextend. Because the last thing you want to do is, you don't know how long this will go. Eventually it'll turn around, but you have to survive this. So you don't want to go overextend, get a bunch of negative cash flow property. Yeah, this will be cool. This will be cool. Then, if this drag out, if that's say this interest rate drag out for 4 or 5 years, no appreciation, flat month, 5 years of negative cash flow, you better have a lot of money to dump it in. So I'm sorry to be a naysayer, but I just want to throw that out. But if you do have the bullet, know what you're doing, have good guidelines, yes, it's a very good time to take advantage of all the market right now.
And that's it, right? Liquidity is always king. So safe leverage and healthy amounts of liquidity always equal a good recipe, right? Someone was telling me the other day, everybody was laughing at Berkshire and Warren Buffett through 2020 and 2021.
Didn't do anything.
Because, didn't do anything, was just sitting on cash, didn't do anything. And now, all the moves that he's making are just incredible. When those returns materialize in 2 or 3 years, it's going to be astronomical for him.
Yeah. Berkshire Hathaway already moved into Japan to buy up all those stuff when the Japanese yen is at its lowest and all that. So he's making a lot of smart moves, like no matter what people say, right? Show not tell, and he shows based on the track record. So he's just funny old guy. And we're actually having our alumni, we're hosting an alumni event going to Omaha, and to just watch 2 old men, and we have our own mastermind dinner and all that, because who knows how long they will be there. I want them to live until they're 200-year-old, but based on statistics, every year they have to survive, it's only 3% to survive the next year. That's based on a physician from a mastermind group that told me about that stats. I was shocked. So what's a better way, right? The old man knows a lot, and smart, very smart. Cool.
Absolutely.
Cool. Let's go into our fire round. Here's the thing, Jack. If you become a billionaire with the B, what would your day look like?
Honestly, I'd probably work the whole day. I don't think much would change. It's just the ideas and the things that I worked on would just be much bigger. So, I think giving back a portion would be good. You want to be able to, do more things with more people that you care about and get fulfillment from that. So I think a portion of your day should always go to something like that. But I think just solving bigger problems, right? What drives me, and I think what drives a lot of other bigger, business people, is taking on hard challenges and just overcoming them. So, challenges on a bigger scale.
Well said. Well said. Let's say if you lose everything right now, you don't have your $10 million portfolio. You don't have your private lending structure. Also, you have the structure. You lose. You don't have your realtor license. You don't have your other investment. No laundromat. Nothing but your knowledge and your face. I drop you of $500,000. What will you do right now to start over?
I think first thing I would do is I'd buy a multifamily property. So some sort of, probably like a 15, 20 unit building, probably in some tertiary city. And then just basically bank that on a levered return, and just, do forced appreciation on it over 6-8 months, do a 2-stage refi on it, try to strip my money out, and then just keep building a portfolio through there.
So buy a multifamily property, 15 to 20 unit treasury market, and try to refinance twice throughout the way.
Exactly.
Pull as much money as possible. Very cool.
Yeah. So realistically, the way you leverage it, you'd probably be able to make around a $2 million purchase, depending on what your loan to value is. And then you just refinance it out. And with some of the new products out there, you can refinance at, 90-10 loan to value on 50-year amortization. So the snowball effect again.
There we go. If you have a podcast, who would you like to interview?
You know what's funny? I thought about the other day, this guy, Zell. I don't know if you've ever heard of him, but he's one of the most famous real estate investors of all time. But he's a very interesting person. Says whatever's on his mind and just kind of a loose cannon. But the way he thinks and some of the things that he's done, in my mind would position him as the Warren Buffett of real estate.
Sam, what's his last name?
Zell, Zell.
Zell. Okay, I'll look him up. Sounds like a cool guy. If you know him, introduce him. I'll get him on the podcast, and I'll give you full credit for it. I'll give you a shout out. What other ways you're giving back?
Yeah, so I ran a charity event for a long time, which we're going to be kicking up again soon. So it's called Youth Ride Along Day, where we basically match underprivileged children with professional athletes. Mm-hmm. Most of the athletes that I was matching with were people that I knew through my snowboarding career and other kind of winter sports athletes. But it was a really cool program. Basically, we'd get tons of gear and we'd partner with Blue Mountain and a bunch of other organizations, and we'd provide them passes and all the equipment and then lessons and things like that, so that, they could get their foot in the door, but also kind of give them an outlet, to be able to express themselves and get physical activity and things like that. That's
good. Let me know, because we're raising for endowment for Mount Sinai as well. I want, 10 to 20% of my time and money actually goes into this. That's why, there's two episodes coming out where we interviewed the ER director for Mount Sinai and someone who pledged their asset, who sold 3 9-figure business. So let me know that, and I'd like to help on that as well. Just sharing and all that. Just more awareness. Very cool thing you're doing.
Yeah, that would be fantastic.
How can our audience find more about you?
Yeah, so feel free to reach out on Instagram. My Instagram handle is @Bernstone Capital, or you can go to my website, www.bernstonecapital.com. Super easy to kind of reach. Feel free to send me an email or a DM or a website inquiry, and happy to connect.
Sounds good. Well, thanks for coming on, Jack. It's great to see someone who haven't reached 30, but has already gone really far in terms of your financial and your impact, and just doing great things in this role. Very happy for you, Jack.
Happy to share my story with your listeners. Thanks for having me on, Cody.
All the links mentioned in this episode are included in the show notes. And if you love this episode, please leave us a rating and review on Apple iTunes. The link is also included in the show notes. And we would really appreciate your help in spreading the word to more high income earners on how they too can maximize both their time and money.
Also, if you still haven't joined our High Income Earners Facebook group, you are missing out on High Income Earners community, where we help each other reach our own version of FIRE.